Alright, today I'm going to be teaching you or I'm going to show you practically how to trade with a confluence. And this is the chart of BTC. This is the chart of BTC. I'm going to teach you practically how to trade with a confluence. Maybe you have been hearing the word confluence or trade with a confluence. Trading with a confluence simply means that you trade with not just one confirmation, or you take your entries not just with one confirmation. When I say confirmation, what do I mean? Confirmation is your edge. When you see certain things in the market that plays out, that gives you the reason to enter the market. That is what we call a confluence. So a confluence can mean that you are trading with an indicator, you are trading with a trend line, you are trading with support and resistance, you are trading with a candlestick pattern or chart pattern. So if you have any of these five things that I've mentioned played out, all of them played out, giving you the same direction, you can take it. Or if you have three out of the five played out, you can still take your entries. So I'm going to show you practically on the chart of BTC right now how to trade with a confluence. And my confluence that I mentioned, I'm not going to be including any chart pattern, but I'm going to teach you with the confluence of candlestick pattern. I'm going to combine that with support and resistance. I'm going to combine that with an indicator, and I'm going to combine that with a trend line. So anytime I see this all four or even three out of these four played out in the same confirmation, I jump into the market and then I trade. And most of the times I works, or I always hit my TP. No strategy works without losses. Strategies work, but most of the times too, you are because you are not a market maker, you are likely to incur some losses. So it is also part of the game. So I'm going to start this by taking you to the higher time frame. As a trader, you should always look at the market from the bigger time frame before you take your entries on the smaller time frame. So the bigger time frame I need can, depending on how you want to analyze your chart or where you want to take your entry, that will determine where or which one should be your bigger time frame. But normally, as today being Monday, I would begin my bigger time frame on the weekly, because it's just a new week we are stepping. So I need to know what happened the previous week before I can then take decision to know whether I should be looking for entries on long or entries on short. Hope you know what I mean. So now we are going to step into the bigger time frame, and I said this is the chart of BTC. So we step into the bigger time frame, which is the weekly. So if I zoom the market, you are going to see three red candles before this recent week, or this today's candle, that is the daily candle, though it also represents a week, but it will just one day or few hours in the day, which is still not yet a complete day yet. So we can see that market has created a recent higher high, and then we are in a pullback. We don't know this is likely to continue to break that structure and continue down, or it's just a retracement and then we'll push higher again. So if I say recent higher high, this is what I mean. Let me do that with this one. This is what I mean. If I circle this area, this is the recent higher high that the market has created. That is 124,000. Since then, market has not been able to trade above that level. So we are now in a retracement. Market doesn't just move in a straight line. It goes high, then comes low, gather momentum, push high again, breaking that high, then create another one. So in a weekly time frame, with my confluence that I said I'm going to show you, this is what I'm going to be looking at. I'm going to be looking at, this is my 50 EMA indicator, this is my support and resistance, and this, I said I'm going to show you three things: my indicator, support and resistance. I'm going to also be including my trend line. There's a trend line here that is very small. Then we add that with what? Candlesticks. I told you I trade with four confluence, that is the candlesticks. Now my candlesticks are these three red candles. So that means that if I'm looking at the indicator, if I'm considering the indicator at the first place, I'm going to be I'm going to be expecting price. I'm going to be expecting price BTC to continue that down movement to come and touch my indicator here. If I see that it has come to touch that indicator, then I will begin to looking for an entry to take long. But right now, because it is in a retracement, market moves in two directions, or it moves in two ways. We have an impulsive move, and then we also have a retracement. Or if I say an impulsive move, this is what I mean. The market will move this way first, then we have a retracement this way, then we also have the second wave or the third wave. That is what we call impulsive move, retracement, impulsive move. So the market doesn't just move like this, or let me put it this way, it doesn't just move like this forever like that, or it doesn't move just like this forever like that. It doesn't do that. So we have an impulsive move, a retracement, and then it's take another one. So right now, as on the weekly time frame, with this analysis, you will see that you will see that anytime market touches my indicator, let me start that from here. Anytime the market touches my indicator from here, it moves high, then we come to retouch this line again. We have another up. We come back to touch it again. We have another one up. And now this is another one that we have also created a high. So we expect price to play the same way by coming down to touch this indicator. Then we look for another entry. You can see that. I hope you are following. Then aside the indicator strategy, we are also looking for a support and a resistance. A support and a resistance is simply the highest support and a resistance. Let me draw two lines here. This can be a resistance, and then this one can also be a support. And now, why am I doing this? This can be a support, a resistance, and this can be a support. Now, a support with the example or with a layman illustration can be the floor of your room, the floor or the ground you are standing on. That is the support, because that is the lowest you can go. If you are going beyond where you are standing, that means you are going into a pit. You see that? But that is where you get your support from. That is where you get your support from. That is where you are standing, where you gain strength, where you get your momentum to also go high again. And the resistance is actually the ceiling of your room. The ceiling of your room. That is the highest. If you are jumping, you'll be able to reach. You cannot continue, or you can continue going high, where you are likely to hit and come back again. That is the resistance. So now, if you see market move from here to this place, there is likely, or there is a chance that it is going to come down to this place again. And if you see market here, it is also a possibility that it is going to also go high. Why? Because anytime market comes to this down here, people feel that the price of that commodity is very low. So what they do is that they buy more. Anytime you see that many people are rushing to buy a particular commodity or a product, the price of that product is likely to shoot high, because supply or demand is high. And then if you can remember your economics lessons, you will see that anytime a commodity is in a high demand, price or supply is going likely to be low. And anytime supply is so much, like so abundant, demand is likely to be low. So this is a demand area, this is a supply zone, and this is a demand zone. So where demand is, this is a supply area, because where access the commodity is in a high, people are likely to sell it. And when they sell, they make more profit. And when it is becoming low here, they also buy more to sell here. So this is what is happening. This is what we call support and resistance. So when we go back to the chart, we will say that this is this line here, this line that I have drawn here, this line that I have drawn here is a support. It was a resistance, though. It was a resistance, because when market was trending down here, when the market when BTC was trending down here, oh, let me do that with this one. When BTC was trading down below under it, it was a support, or a resistance. But once we break through it, it automatically becomes what, a support then. And then if price comes to touch it without continuing down, it is now a support. But once price breaks it below, we it becomes a resistance again, because price had broken below it and it is now going down. So we wait for price to go back and touch that resistance, and you look for your possible entries to continue the market down. But if it comes down, break it. If it breaks down, it comes down this way, then comes back to break it up again. You look for a retest like this again to see it going high. But if it doesn't play out that way, you expect price to come and hit this way, and then you take your possible entry to trade the market down again. So with this support, or currently as it is acting as a support though, but we see that it price with the last week candle closes below it, so we consider it as what, a resistance again. We call it, consider it as a resistance. Now if this is a resistance and price is trading below a resistance, we consider to take what, entries on what, a short position. So this is it. Now I'm also going to consider that with my trend line. Even though the trend line is playing out, but because it is on the higher time frame, it looks so small. So we step down to the lower time frame. And how do we get to the lower time frame? Now we are in the weekly time frame right here. You can see that we are in the weekly time frame. So we'll switch from the weekly time frame to the daily time frame, which is more closer to you. When you switch to the lower time frame, it makes the market closer to you than looking at it from the weekly time frame. Now we want to see what is happening close to us, so we switch from the weekly to the daily time frame, so that the chart will look more closer to us than we are looking at it, or we are seeing it from the weekly time frame. So now with my indicator, I see that market in the weekly time frame was coming to retest it, but we haven't touched it. But when I switch to the daily time frame, we see that market or price have come to break it, and we are trading below that indicator in the daily time frame. So what do? I'm looking for entries on short, because anytime I see price trading under my indicator, I make sure that I don't look for any price or any re-entries to take long. I consider only entering in short positions, and when I say short, I mean sell. So now this is what is happening. Price had broken through my indicator and we are trading below it. So what do? I know that I'm looking for ways to take short, not long. And now I also look at my support and resistance level. Where is the price as in relation to the support and resistance? Price is trading below my support, so that means it is likely that it is going to continue that. So I'll be looking for selling too. And when I also consider my trend line, I see that market is truly trading under the trend line. It is also trading under the trend line. And now I'm going to be looking at candles. What are the candles that are playing out right now? So I also consider that one. That is what we mean the confluence do. So this is what is happening in the daily time frame. Now I want to see more closer to the market than looking at it from the daily time frame. Daily is still a bigger time frame for me to enter. So what do I do if I want to see or have a more clearer or closer view of the market? I switch from the daily to the 4-hour time frame. So I change from daily to the 4-hour time frame, and I wait for market to load. If you are enjoying the classes so far, please kindly hit the like button and give a comment, so that this video will be able to reach more people and YouTube algorithm will recommend it to others. Thank you for subscribing and thank you for sharing. So let's continue. Now if we switch back to the daily time frame, the 4-hour time frame, we can see that yes, our support and resistance market is actually playing right exactly there, and our reason to take short is also playing, because if I see this candle, even though we will not consider entering the market right now, but this is what we call tweezer. This candle that is forming, it is called an engulfing candle. If we close right now, if the market closes right now as it is, it is called an engulfing, a bearish engulfing candle, and it confirmed, or it has formed under the resistance zone. That means we can take a short position under that place. And if you also consider the indicator, it is also confirming that market is in a downtrend. With the trend line, it is still the same. With trend line, it's still the same. With the candle, it is the same. With the support and resistance, it is also the same. So that means all these confluence are playing out, telling me that I can take short position. So now I'm looking for entries on a lower time frame. I switch from 4 hour to 1 hour, and when I look at the 1 hour time frame, I see that yes, BTC in the 1 hour time frame is actually playing very well. That many people are selling the market right now as compared to people who are buying. So if you want to also make money, you need to align or join those who are in the high control of the market. That means that if you are looking at this market right now, you should be taking a short position, because let me show you something here. With the confluence I mentioned, this is your trend line, market is trading below it. This is your support and resistance line, market is trading below it. This is your indicator, market is trading below it. And these two candles, or these three red candles, also gives you confirmation that sellers are in the market. So all these four confluences have confirmed or confirmed that you can take your short position. You can join the sellers to trade BTC down to where it is likely to go to. But because you likely to take your profit, you can take profit at any point of your choice. Now I look for entries alone. I take my entries from the 15-minute time frame. So I just quickly get to 15 minutes. Then I take my entries. So when I come to the 15 minutes time frame, I can still see that everything is aligning and giving me that confidence that I can take the short position, because this is my trend line, this is my support and resistance line, this one here is my indicator, and then these candles here represent my entries candle. So I am okay to join the sellers. Now this is how to trade with a confluence. Trading with a confluence is so simple if you understand the market structure, and if you have all these things played out, you can be confident to take your trade. And like I said earlier, no strategy works 100% without failures, because you are not a market maker, you are only a trader, and you don't have any major decisions to make in the market. You only join what is happening to also trade it and trade along. So with all this in place, you can be able to trade and trade profitably. Like always, just my crypto that loves you. And I wish you trade green and trade green. Thank you. Until another update, I say bye to you.